From the morning reading, after 3 straight weeks of declines, initial jobless claims dropped slightly more than economists were forecasting for their largest weekly decline since April. After hitting the level just under 300,000 last week, jobless claims fell by 15,000 to 281 this week versus estimates of 283. With this week's readings, jobless claims have now been under 300,000 for 19 straight weeks. This is the longest streak in 15 years, since June of 2000. This is very significant in that jobs is one of the 4 big pieces of the economy in terms of macroeconomics and what is likely to make the economy turn into the recessionary cycle or recessionary phase of the business cycle. So pretty interesting quote there, the longest streak in 15 years. I thought I would throw that into the morning reading headlines for today. The next one, the bounce that we've seen the last week or so has been fierce, but breadth has not been so great. With the S&P 500 now just a few points away from all-time highs, just 54% of the stocks in the index are above their 50-day moving averages. That is not a healthy sign of a bull market, but it's actually one of the traits that we look for bull markets that are running into extended periods, and you start seeing less and less breadth. The number of participants above their 50s, above their 200s, etc. If you look at breadth by sector, you can see which areas of the market are doing better and worse than others. The 2 consumer sectors have strong breadth readings compared with the overall market, and the same goes for healthcare and financials. Cyclical sectors where breadth remains weak include energy, materials, industrials, and technology. While weak breadth for energy and industrials is expected, investors may be surprised to see such weak breadth for tech. Again, another a signal that this market is not that healthy. And then finally, from the morning reading, precious metals have been taking a hit lately, and that is reflected on the miners. Every stock in the HUI Gold Bugs Index has traded below its 10, 50, and 200-day moving averages for the past 2 days. And on both days, more than a third of the stocks have reached 52-week lows. In the history of the index, this has occurred on 9 other days, clustered in 4 time frames: early September 2008, mid-October 2008, mid-May 2012, and late October 2014. They all occurred within several days of 10% rallies in HUI and other indices of gold miners. They should be getting a reprieve soon, with any heavy selling in the coming days likely to be exhaustive and quickly reverse. Might want to do a little research on that. Might be a potential trade setup posed in the Gold Bugs Index. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day of the key U.S. financial markets. It is 6:38 Central Time, and I'm recording this in preparation for the market day of July the 17th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into the morning report and see what we had going on in our overnight action. Not an awful lot with respect to the U.S. futures indices. They're kind of mixed, but all mixed around scratch. So nothing really there on any of those to get excited about. NASDAQ is up about just under 1/3% for the one that's moved the most. In terms of crude oil, down 0.2%. And note, I have moved to the new contract on this. Crude oil is in the middle of futures rollover. Actually, as the time that I cut this morning, there was slightly more volume on the old contract than the new contract, but I would expect that most of the volume today will start moving into the new contract, and that'll quickly flip during the course of trading today. On the euro, up about 0.11%. bonds up about 0.4%, and gold essentially scratch. In terms of overseas action, China up big, 3.5%. Hong Kong up about 1%. Japan up about 0.25%, Germany down about 0.25%, and the United Kingdom essentially scratch. In terms of macroeconomic reports for today, fairly quiet. We do have building permits and CPI and housing starts. Once the market opens, we do have University of Michigan consumer sentiment, and then we do have an FOMC member speaking, Fisher. So be aware of all those activities today. I said not much. I guess there's a fair amount of macroeconomic report items for today. In terms of volatility, we did have standard deviations moves put in by the S&P 500 and by the NASDAQ yesterday. These were up moves, but also look at the IV percentiles. These are about as low as you get. We've seen quite a bit of low range activity in 2015, but we're down near as low as it gets once again. A 3 on the S&P, a 0 on the Russell, 4 on NASDAQ, and only 17 on the Dow, which tends to be running up hotter than the others. Short-term VIX down to a 10.35. This is getting about as low as you see it. Notice the skew keeps edging up, 123.06. We throw the caution flag at 125 and the danger flag at 135. So that has been starting to peek its head up over the hill, as it were. In terms of the daily report, we have not a lot of changes. We're still in phase 5, looking for that break of diagonal and horizontal support. We can take a quick look at the charts. We are looking for the establishment of a higher low. We've had obviously a higher high. In fact, we're back up near the top of the range, but we've gone basically straight up from the bottom of the range where we had the whiplash fake breakout at the bottom of the range, and then now here we are just a few days later. Once again, we've heard this story earlier in the year where you hit the bottom of the range and then it's like 2 days later you're 80% of the way back to the top of the range. It took a little longer than 2 days this time, but still perhaps we came from further too. That should be also mentioned. And once we started making the real move, 1, 2, 3, 4, 5 days, and we're about 90% to the top of the range. We're near the all-time highs on the SPX. We need to establish a higher low swing pivot, and we would look for a retracement, and that the retracement would come back to this line right here. Would not be terribly surprising. That's also in the cloud, so something to kind of think about there. On the NASDAQ, all-time high yesterday, and look, it closed at the high. So this is quite significant for the tech, and we just talked about how tech breadth was lacking, but obviously there are about 5 players in the NASDAQ that have a very, very, very strong weighting. And look at this, Google. Google absolutely on fire, and a big part of that is probably being led by Google. In terms of the Dow, you see it continues to be the weaker of the 4, but obviously also been moving up very strongly from that breakout bottom, or false breakout bottom, I should say. And then the last one, the Russell, not as strong as the NASDAQ. We'd like to see it break through that channel, and it has been really struggling to get through the backside of that former ascending channel. So a lot of signs that this could be starting to peter. You look at the size of the candles now, you look at where we're running into, and that we would have some sort of retracement sometime soon, not a bit surprising. Obviously today's also OPEX, so that we would have some volatility as as people start settling their positions around options expiration. Every Friday now is options expiration with the number of weekly contracts being traded, but this one's the big one. This is the monthly one, so that will carry some extra weight. Other things, IBD trend is uptrend under pressure. That remains the same. C minus and D on the accumulation distribution scores. GMI index is at a buy signal with a 6 out of 6. No change in the decision point scoreboards, but we've had obviously those recent short-term signals come in and strengthen. Buy side position sizing opinions at 50% for the portfolio investor position sizing and 100% for the volatility-based opinion. In terms of market postures, we'll continue to see significant strengthening here. S&P all the way up to 69, Dow 73, NASDAQ 71. Only the Russell is somewhat lagging, but it is in a normal all-out bullish mode now at a 56. We continue to see threshold level at 2. This is right on the borderline of going down to a 1, if we continue to see bullish action at all, we probably will see that ebb off. Part of the reason it's still at a 2 is distribution day count is still high, uptrend under pressure is still present. We did have a good day on the New York Stock Exchange, 353 new highs put in yesterday. The risk aversion indicators continue to improve, but are still some warning signs here. We have 3 that are still in a technical risk off, but all 3 of those are in improving conditions. In terms of special opinions, no new changes for today. VIX is inside the acceptable window. Conditions are acceptable for option income strategies. Covered calls also acceptable. Perhaps reduced position, 1-to-1 distribution between in the money and the out of the money. And then put selling. Conditions also acceptable there, but also consider that position sizing considering that the elevated risk levels that we've been under. In terms of sector specific, quite a bit more health here. You notice energy, material still suffering the most. And yesterday you see financials, utilities both doing well. Healthcare has been the most consistent story, and we mentioned that in the morning headline review. Healthcare continues to be the most consistent performer. You're not going to get a 50% return in healthcare. It's not that kind of place like maybe tech can be, but for the 1 year, for the year to date, it is clearly the best performer, and that frankly would be expected to hold up even if we were to move into the recessionary phase of the business cycle. Healthcare would be expected to be strong in phase 6, so continue to watch those players in healthcare. Now there's kind of a bifurcated approach with healthcare. Obviously there's the long steady players, and then there's biotech, and biotech can be a very heavy high beta kind of area, but if the market is bullish, biotech can be expected to be very strong. If the market is weak, that one will definitely come off, and other parts, other industry groups of the healthcare sector will likely be more consistent and higher performance. That should be enough for today. As always, if you find this useful, we appreciate you liking us on YouTube and following us on the YouTube channel that we have, and of course retweeting us to your Twitter followers or StockTwits followers, etc. Greatly appreciate each of you each and every day. Disclaimers as always. Hit the pause button if you need more time to review that, and we'll see you back here Monday morning for the market preview that early morning. Good trading.